Hello and welcome to day 4 of 5 in our $50,000 Take Profit Trader evaluation. We're getting close to the finish line, and I want to give you a quick update on our current progress and performance so far. Starting with the account overview, our current account balance stands at $53,580, and we ended yesterday with a net profit of $530. Now let's talk performance. We've completed 3 of the required 5 trading days, which means after today, we'll only have 1 more to go. We've successfully reached our profit target. The minimum required was $3,000, and we've already hit $3,580. That's a major milestone. In terms of our profit distribution, our largest winning day came in at $1,645. That accounts for 45.95% of our total profits, which is comfortably under the 50% rule. So, we're in full compliance there. Today marks day 4, and we're right on track. The focus now is to stay consistent, manage our risk carefully, and finish the evaluation strong. Thanks for tuning in. Let's get into the trading. We are here at market open and get a strong bullish candle heading towards yesterday's and the pre-market high. We look to see if we get a rejection from these levels and a retracement to the downside. Me personally, I always try to avoid trading within the first 15 minutes, as the market tends to have big moves, which can lead to you easily hitting your stop loss. Remember, the day is long, and sometimes you need to just sit on your hands and wait for the market to develop. The buying pressure is strong, and we push through the resistance to make all-time highs on the market. We are now waiting for our 15-minute opening range to form and wait for an indicator to take a long or short position. We get a break to the upside and mark out an order to take a long position and set our TP and SL. However, the buying pressure is extremely bullish and the price pushes up before we get the opportunity to execute the order. So the market's making all-time highs and you're thinking surely it has to come down soon. You're not alone. It's one of the most common thoughts traders and investors have. But here's the truth. Taking short positions just because the market is at a high is often a terrible idea. Let's talk about why. When markets hit new highs, they're doing something powerful. They're showing strength. In technical terms, an all-time high means there's no overhead resistance, no prior price ceiling. That's often a green light for buyers, not a signal to fight the trend. And remember, markets can stay irrational longer than you can stay solvent. Betting against momentum is like standing in front of a freight train and hoping it stops just because you think it should. Shorting at highs without confirmation isn't contrarian, it's just premature. Now let's say you were watching the setup, you had the chance to enter, but you hesitated. You blinked and the market took off without you. Missing a move sucks, we've all been there. And in that emotional frustration, what do most people do? They try to force a trade, they revenge trade. Or worse, they short into strength, trying to catch the top. This is where discipline becomes everything. Trading is not about catching every move, it's about catching the right moves. If you missed a trade, it's not a signal to take the opposite one out of frustration. That's not strategy, that's ego. Look, the market is infinite, opportunities are infinite, but your capital, your mental clarity, those are not infinite. Every dollar and every decision you make needs to protect your ability to stay in the game. If you missed a breakout, cool. Step back, reassess. Another setup is coming. There's always another setup. The best traders aren't the ones who trade the most. They're the ones who wait patiently, act decisively, and manage risk religiously. So next time you're tempted to short the market just because it's hitting new highs, ask yourself, am I trading the chart or my emotions? Stay patient, stay focused, and above all, stay disciplined. Your edge is consistency, not prediction. When the market is making new all-time highs, the pullbacks tend to be very small. Here on the 5-minute chart, we got a small pullback followed by a strong green candle and are expecting continuation to the upside. Remember, we only need a small profit, so we get a tick in the box for trading our 4th day of 5. So we are not looking for massive profits. We enter the market for 1 contract long and are looking for an exit at our TP or earlier depending on how the market develops. We get a strong push upwards and miss our take profit by 2 ticks. You can see on the MACD we are starting to lose buying pressure, so we decide to take our profits and exit the trade. So that puts us up $930 on the day. Solid gains, and that wraps up day 4 of 5. One more day to go, and we're closing in strong. If you got value from this video, hit that thumbs up and don't forget to subscribe for more trading breakdowns and real-time recaps. I'll catch you in the next one.